Hey guys, what's up? And welcome to 15M Finance. Quantum computing is the next frontier in technology, and just maybe, even in the stock market. Looks like the world's most powerful supercomputer companies are on fire. Today, I'm diving into this revolutionary sector and breaking down three standout companies leading the quantum race: D-Wave Quantum, QBTS, Rigetti Computing, RGTI, and Quantum Computing Inc., QUBT. I'll cover their recent performance, insights from top analysts, and my analysis. Let's jump right in. D-Wave is transitioning from R&D to commercialization, with a growing customer base and increasing use of its cloud-based quantum services. As the quantum market matures, D-Wave's recurring revenue streams are likely to grow. Like most quantum companies, D-Wave operates at a loss as it invests heavily in R&D and infrastructure. Investors need to be patient as the company builds its ecosystem and achieves economies of scale. So, what are the risks, and is it safe? The simple answer is no, it's not a safe bet. It is actually quite risky, but if you have some extra cash lying around, this may just be the stock for you. Quantum annealing has specific use cases, and if gate-based quantum systems dominate, D-Wave may need to pivot or expand its technology portfolio further. So, who is the competition, and should you be worried? Companies like IBM, Google, Alphabet, Rigetti, and IonQ are also aggressively advancing their quantum technologies, which could impact D-Wave's market share. Here are my final thoughts on it. For risk-tolerant investors who believe in the future of quantum computing, QBTS could be a high-reward opportunity. However, due to the speculative nature of the sector, diversification and careful monitoring are critical. Newbies, don't bother yourself with this one. Now let's examine what the analysts are saying. All 5 analysts rate QBTS as a strong buy, indicating high confidence in the company's potential. This is notable as it suggests optimism from the best-performing Wall Street analysts. The current price of $9.14 has already surpassed the highest target price of $7, which raises questions about overvaluation relative to analysts' expectations. The average price target of $4.19 represents a minus 54.16% downside from the current price. Even the highest forecast of $7 suggests the stock might correct downward from its current level. Here is my take on it. Despite being rated a strong buy, analysts likely base their targets on fundamental performance and revenue projections, which may not justify the current price of $9.14. The rally may have priced in growth expectations far ahead of the company's actual execution. If you already have the stock, then consider locking in profits if the stock begins to show signs of weakening momentum, particularly if it falls below key technical levels, such as 645. Reassess your position if the price approaches analyst target levels like $7 or $4.19, which corresponds to the blue line on the TradingView chart displayed on the screen. Let's do this quick and easy TradingView analysis for D-Wave Quantum, QBTS, designed just for beginners in 5 minutes. The ideal entry price for QBTS today would be anywhere between $6.50 and $7.20. The blue line on the bottom is your key level. If the price were to go below this level, I would plan on getting rid of this stock and respect the stop loss at $5.70. I know I will exit this position at around $13.99, which I think will be an all-time high for QBTS. So there you have it, guys. Again, like I have said, this is an own with caution stock. Now let's look at Rigetti Computing, RGTI. Rigetti Computing is a full-stack quantum computing company specializing in quantum processors and integrated software solutions. Rigetti's approach focuses on building scalable systems, enabling businesses and researchers to use quantum technology more effectively. The company has already established partnerships across multiple industries, which strengthens its foothold in the quantum space. However, like many others in this sector, Rigetti remains in its early stages of commercialization, investing heavily in R&D to gain a competitive edge. So, what are the risks, and is it safe? The straightforward answer is no. It's not a safe investment. Rigetti is even riskier than D-Wave Quantum. This risk is heightened because Rigetti stock is currently at an all-time high, which means it could experience a significant sell-off at any moment without warning. So, who is the competition, and should you be worried? Companies like IBM, Google, Alphabet, Rigetti, D-Wave Quantum, and IonQ are its main competitors. While Rigetti's integrated approach to hardware and software is promising, its competitors' larger ecosystems and customer bases pose a serious threat to its growth. For risk-tolerant investors with an interest in quantum computing, Rigetti Computing offers a unique opportunity to invest in the future of full-stack quantum technology. However, the speculative nature of this stock means diversification is critical to mitigate risks. If you're new to investing, you might want to avoid Rigetti for now. It's a high-risk play with uncertain outcomes. Now let's examine what the analysts are saying. Recent analyst ratings for Rigetti have been mixed. While some analysts see the potential for significant growth, others remain cautious due to the company's financial challenges and scalability concerns. Although most analysts say this is a strong buy, they also mention a double-digit downside. The current price of 19.02 reflects strong momentum, but most price targets suggest the stock is overvalued at these levels. The average price target of $5.05 represents a minus 71.8% downside from the current price. Even the highest forecast of $12 suggests the stock might correct downward from its current level. Here is my perspective on the situation. Despite receiving a strong buy rating, analysts likely set their targets based on fundamental performance and revenue projections that may not support the current price of $19.02. The recent rally could simply be a result of excessive enthusiasm and speculation. If you already have the stock, then what should you do? Similar to D-Wave Quantum, consider locking in profits if the stock begins to show signs of weakening momentum, particularly if it falls below key technical levels, such as $14.35. I'll go over this in my TradingView analysis in just a moment. Let's do this quick and easy TradingView analysis for Rigetti Computing, RGTI, designed just for beginners in 5 minutes. The ideal entry price for RGTI was between $10 and $12. That has now clearly passed. The blue line on the bottom is your key level. If the price were to go below this level, this could mean further downside. As you can see, there is not a lot of room for upward movement, and it is most definitely a short-term bearish stock. So, I'd wait a week to find out what direction the stock will take. I am currently not holding this stock, but I have traded very profitable cash-secured puts. Finally, let's look at Quantum Computing Inc. QUBT, or Quantum Computing Inc., focuses on industries like finance, logistics, healthcare, and cybersecurity, enabling businesses to use quantum computing for tasks like portfolio optimization, route planning, drug discovery, and encryption. And unlike some quantum companies tied to specific hardware, QUBT software can run on different quantum computing platforms, making it versatile and compatible with existing quantum technologies. Like D-Wave and Rigetti Computing, QUBT is heavily invested in research and development. However, its deal with NASA is a positive sign that there is room for growth. So, what are the risks, and is it safe? The simple answer is no, it's not a safe bet. Like most quantum computing stocks, QUBT is speculative and comes with significant risk. One major risk is its reliance on market adoption. If industries are slow to adopt quantum computing, QUBT's revenue growth could stagnate. Additionally, startups like Rigetti Computing are also gaining ground, which adds more pressure to QUBT's market position. So, who is the competition, and should you be worried? QUBT's competition includes tech giants like IBM, Google, Alphabet, and IonQ, all of which are aggressively advancing their quantum offerings. Here are my final thoughts on it. For risk-tolerant investors, Quantum Computing Inc. offers an exciting opportunity to invest in the future of quantum technology. However, the speculative nature of the stock means it's best for those who can handle volatility and long-term uncertainty. If you're new to investing or looking for something stable, this might not be the right stock for you. But if you believe in quantum computing's potential and have some extra cash lying around, QUBT could be worth exploring. Now let's examine what the analysts are saying. Analyst coverage for QUBT is limited, which reflects the speculative nature of the stock. That said, the company's impressive price performance, over 1,500% gains in 2024, shows strong market enthusiasm for its potential. This stock was so under the radar until recently that no analyst thought it was actually that important. However, on TradingView, it is rated as a strong buy and has the least amount of downside when compared to D-Wave and Rigetti. My take? QUBT has huge potential as a pioneer in software-based quantum computing solutions, but the current price may be ahead of its fundamentals. Its long-term success depends on the adoption of quantum technology and the company's ability to expand its market reach. If you already have the stock, then consider locking in profits if the stock starts showing signs of slowing momentum, especially if it falls below key levels like 1523. Reassess your position if the price breaches $12, and it's best to respect the stop loss. Let's do this quick and easy TradingView analysis for Quantum Computing Inc., designed just for beginners in 5 minutes. The ideal entry price for QUBT is between $12 and $15. QUBT stands out because all the clouds are blue and green, indicating that there is potential for upside in the near term. The blue line at the bottom represents a key support level. If the price falls below this level, then consider exiting the position and respecting the stop loss. The orange line at the top serves as resistance. There is a significant gap between these two lines, suggesting the potential for a substantial profit. I hold 100 shares and I expect to exit this position at around $20 per share. So, there you have it, guys. Only trade what you can afford to lose. All right, folks, that wraps up my take on quantum computing stocks and ways to possibly make some profit. If you found this analysis helpful or learned something new today, do me a favor and hit that subscribe button. I'm here to bring you straightforward insights on tech and investing, and I'd love for you to join me on this journey. Don't forget to leave a comment below. Let me know your thoughts and which stock you'd like me to analyze next. And of course, give this video a like if you enjoyed it and share it with anyone curious about quantum computing. Thanks for watching, and I'll see you in the next one.